What's happening in the markets this week, Ben?
Well, financial markets are lifting themselves to new heights once again, with both the S&P 500 and the Dow Jones Industrial Average setting new records late last week, following good news for corporate earnings and some encouraging economic data. Chinese GDP for the first quarter of the year was the star of the show for data releases, at an incredible 18.3% year-on-year growth rate from the end of March last year. Of course, it should be noted that this measures changes in Chinese GDP from trough to peak during the coronavirus pandemic, since the Wuhan lockdowns were biting hard on economic activity at the end of March last year. Despite the bumper headline number, growth was actually a little lower than expected by surveyed economists, and may mask some softness in Chinese production and investment, which have both slowed since earlier this year. This has led some commentators to speculate that the rebound in the Chinese economy may have already peaked, and we will see growth continue to moderate from here. Last week we also saw unemployment figures for Australia released for the month of March. All in all, it was another beautiful set of numbers that saw the workforce participation rate hit an all-time high, unemployment fall from 5.8% to 5.6%, and just over 70,000 new jobs added for the month. This exceeded the expectations of surveyed economists, but it might be a little early to declare victory over the economic shock from COVID-19 just yet, because the end of the JobKeeper program on the 28th of March should show up in softer job numbers over the next few months. Treasury estimates that the withdrawal of JobKeeper could cost up to 150,000 jobs, but they would be quietly pleased with the resilience of the labour market over the last few months, and it should help the Treasurer to deliver a healthier than forecast budget result in May. Looking at some prices in the markets, we've seen yields on the benchmark 10-year US Treasury bond fall back from recent highs of 1.74% at the start of the month to 1.58%. This should take some heat out of rates markets and help to reduce any pressures on banks to increase lending costs. The Aussie dollar continues to strengthen, having gained 1.35 cents since the start of the month to be dealing at 0.7735, and Bitcoin has endured its biggest fall since late February, declining by just over 15% from the highs to be dealing around $53,700 US. And that's finance.
Thanks, Ben. There's some positive news about the unemployment numbers, but as you said, time will tell.